Hello! Tonight's headlines is Superman J. Powell saves the day. What exactly happened? Today it's March 18, 2021. Thank you for watching the Awesome10X Global Market Update. This is Nikki, you also known as Faces Trader. If this is your first time, please don't forget to like, subscribe, and share the Awesome10X Global Investing channel here on YouTube. Okay, so let's begin. All right, so these are what happened last night, a recap and analysis of Fed Chairman Powell's market-moving comments on the rates. If you are Chairman Fed J. Powell, you are the god of the market. So Federal Reserve Chairman Jerome Powell said that the economy has to go past the inflation concerns, and it is it's not something that he is worried right now. He said that the monetary policy decisions does not expect to hike interest rates throughout 2023. So a few things, he expects that the rates will get unchanged, and the Federal Reserve is not expected to adjust the interest rates this month. He's also signaling that because of rebounding economy, percolating inflation, a stock market jumping to records, doesn't usually warrant easy monetary policy. The challenge is to explain that position to investors. Okay, so why don't we listen straight from the horse's mouth? All right, so let's read and listen to Miss. This is a 2-minute recap. The Fed Chair Powell on the 10-year yield and its impact on the economy. Let's listen in. Okay, Mr. Chairman.
Current level of the 10-year yield and some other long rates out there, whether or not you think they would have a negative effect on the economy, and if not, is there a level that would give you concern? And finally, the third part, other central bankers have expressed concern about what's happened to yields in their countries, and even some taken action, but not you. Could you give us your general idea or orientation towards the idea of coming into the market and affecting a particular tenor of the bond market? Do you like that idea? Do you not like it? Is it at the top of your toolbox, or is it something that you think is at the bottom of the toolbox?
Sure. So we monitor a broad range of financial conditions, and we're always attentive to market developments, of course. We're still a long way from our goals, and it's important that financial conditions do remain accommodative to support the achievement of those goals. And if you look at various indexes of financial conditions, what you'll see is that they generally do show financial conditions overall to be highly accommodative, and that is appropriate. So that's how we look at it. I would add, as I've said, I would be concerned by disorderly conditions in markets or by a persistent tightening of financial conditions that threaten the achievement of our goals. We think the stance of monetary policy remains appropriate. Our guidance on the federal funds rate and on asset purchases is providing strong support for the economy, and we're committed to maintaining that patiently accommodative stance until the job is well and truly done.
Could you give us an idea of how you sort of feel about that tool of being able to come into a particular part of the market and either doing an operation twist or something like that? Is that something you feel to be the top of your toolbox, or something that you don't really prefer?
You know, the tools we have are the tools we have. What I'm telling you is that the stance of monetary policy we have today, we believe is appropriate. We think that our asset purchases in their current form, which is to say, across the curve, 80 billion in treasuries, 40 billion in mortgage-backed securities on net, we think that that's the right place for our asset purchases. Now, we can change them, of course, in a number of different dimensions, should we deem that that's appropriate. But for now, we think that our policy stance on that is appropriate.
Shepard Smith here. Thanks for watching CNBC.
Okay, did you understand what he said? You want the TLDR version, too long, don't read version. The too long, don't read version is very simple, and I shared it already in my Faces Trader profile. What Mr. Jerome Powell simply stated is, J. Powell is long, he's Superman, he wants to save the economy, and those who are short needs to cover, and they need to go long. It is what it is. Change your mind when the Fed says so. That's a too long, don't read version. That's really what happened last night. After the Fed, Powell actually saved the markets actually made a U-turn. How do we know about this? Just check 2 p.m. 2 p.m. U.S. time is simply 2 a.m. Philippine time. So let's take a look at the NASDAQ 100. There were fears of what's going to happen. Of course, it can't be seen here because that is too long. 15 minutes, you look at the 15-minute chart last night and you could see where the changes happened. Specifically here. After the Jay Powell speech, the market saw that the dovish statements of Mr. Jay Powell prevented the drop, and actually the people who needed to short here actually had to cover here. So what you're seeing is that it's gonna go higher. The market is probably gonna go higher within the next couple of months or weeks. You've got the US Fed protecting the market from its bubblicious pricing. In fact, to give you a sampler of what happened, when did BTC actually rise? The Fed printer goes brrr. It rose again last night, exactly at that day, 2 p.m. Everything reversed actually. Whoa, what's happening here? Wait, let's see. BTC, USD. So it actually got supported here last night. Could clearly see it in a 15-minute chart. So the market saw that the Fed would print money all the way. Infinite Fed printer means that BTC holders are off the winning side. 54,000 goes up to 59,000. I wouldn't be surprised if BTC would go up tonight to above 70, 60,000. In the next couple of days, kill the shorts who tried to short BTC because go long the Fed printer forever and ever. So that means that your BTCs go up all the way. And if BTCs go up all the way, your blockchains go up, your Canons go up, your e-bonds go up, all of your cryptos go up. So the people who tried to sell, actually thinking of a drop, had to cover, and it's gonna go up. So stonks go up. It's a stonks go up scenario. When did it change? That day, around 2 a.m. Thanks for the Fed printer, and the bulls are saved yet again. So Canaan goes up, E-bond goes up, Bitfarms, Hot 8 mining, the blockchains go up. E-bond goes up. All of your blockchains go up. All of the people who shorted had to cover, and therefore, I'd say that last night was a reversal move. So you've got this move tonight. Actually, it will persist going up tonight. So it could actually go all-time highs with BTC going up to all-time highs. Anyone who had shorts actually had to cover, and that's what I precisely did. I was up 10% before I was sleeping with my shorts. I woke up seeing that the markets reversed to the upside, and so we have to change our mind. We need to go long. So some strategies for you. All right. So let me give you a few strategies. Today is March 18, 2021. I go to my favorites, right? So I go to my favorite names. Let's take a look at my favorite names to buy in the market. So I was telling you that Volkswagen, we're doing a playing catch up. Actually, Volkswagen last night went to all-time highs. VWAGY actually went up to 46. I was surprised with this. I knew that it was going to go up, but I was surprised on how fast it moved up. After a conference call 2 days ago, just $30, in just 2 days, it went to 48. Oh my God. Yes, 50% up on Volkswagen. They said that they want to kill Tesla, and it seems that they proved it. For some reason, it went 50% up in 2 days. Doesn't matter. I don't have longs on Volkswagen, so of course I'm a little bit sad about this. But thank you. You confirmed to me that the bulls are very much long on the teeth. And with Volkswagen going up, you did hear me say that I like half-breeds, and value and momentum is a half-breed. What's a half-breed? It's a Flintstones/Jetsons. People think that it is simply a Flintstones. Other people doesn't know that it's half. It's a half-half. A Flintstone is a value play, and the Jetsons is something that adapts, and that is what you see on Twitter. So Twitter tonight is actually still a buy, whether you bought it last night here about 63, 68, last night it fell to about 68. Even at $70, looks like this is going to go up, up, up all the way. So if you're looking for longs, I'd say Twitter continues to be remaining a long. Now, of course, why is Twitter going up? We already said that Twitter Spaces, we are of the belief that everything that Twitter is doing right now is on the long-term fundamental correct. Awesome10X approves. Twitter Spaces is going to get launched this April. It is a CAC strategy, a conquer, acquire, kill strategy. It's a copycat of Clubhouse. And Twitter people are happy with that. Even the advertisers are also happy with that. E-commerce suggestions for Twitter is also a great thing. Now, there's a lot more. What's happening with your Pinterest and Snap? Take a look at the charts here. You can see that the strongest names are actually reversing to the upside. There's no point actually trying to stress it's going to fall if the markets are willing to buy it back. So we're not going to go down. That's what the markets are saying. We're going to go up. So the correction from 89 all the way to 64 tells us that the markets are willing to buy up the strongest ones. Your Pinterest goes up. Your Snapchat goes up. Your Twitter goes up. You can see all that way, the moves up. Digital advertising on these value momentum kings and queens. What does it mean if you're short your Magnite, you're short your the trade desk, and so forth? It means you cover tonight. No matter how bearish you are of their valuations, it means that you will get killed on a potential covering of the rally. There's a short covering rally move. There's news on Magnite. They said that they're gonna sell convertible notes. Let me read the news for you on Magnite. So this was last night, announcing pricing $350 million through a convertible notes offering 11 hours ago. The notes will be senior unsecured obligations of Magnite. Interest is payable in arrears. It's a simple 0.25% per year. If you were the company and they gave you unlimited credit line of just 0.25% per year, you'd be going gung-ho happy. You're happy that the market is giving you very low interest rates, and that's what you're seeing here on some companies like these. Now, that's also the same reason why your financials keeps on going up. Your financials in the US keeps on going all-time highs, even if they're Flintstone categories, because of low interest rates. Look at XLF, continues to trade at all-time highs. And your XLFs are who? They're Goldman Sachs, they're your JP Morgans, they're your Bank of America. And I read in recent times that Bank of America said that they are not worried about the fintechs. They're able to actually transition in this modern world. This is Bank of America trying to fight the good fight and trying to break above to all-time highs. So these are your Flintstone categories sharing that we are not dinosaurs. We are actually able to change our business model to go with the times. And take a look at Bank of America, breaks above 35, now trading at 38. We could see that the world really is playing up a catch up on these quote-unquote Flintstones world, trying to be a half Jetsons world. So they are half breeds. That's what they're trying to tell the world. So far, the half-breeds are going all-time highs. We're seeing General Motors continuing to go all-time highs. Looks to see that General Motors is going to go up to $75. Now, let's take a look at some Chinese fintech. You are seeing that your Chinese fintech continue to get clobbered because of your Chinese regulatory frameworks. And in this light, I'd like to share that I would like to contrarian this Chinese government trying to say that all these fintechs are going to get the fate of your Alibabas. While it's dropping, $650.10 all the way to $566 is a great long-term buy. So this is a long for me. I'm looking to also go long for your Zoom videos here at about 336 all the way down. I do believe in the shift to remote work. Let's take a look at some investing related concepts here. With the markets actually going to a comparatively lower valuation after a correction. Take note that Zoom video already corrected 45% from its peak. While it can fall further, I'd say that there's enough bulls able to go say that, hey, F you to the bears and say long to the shift to remote work forever and ever for the next 5 years. And this is a secular trend that I'm willing to partner with the bulls. So this is a long for me. Nokia sees its comparable operating margin growing to 10 to 13% in 2023. What we are seeing with Nokia is that they have, of course, transitioned to a 5G world. I do believe that Nokia and Ericsson are actually poised to benefit in the next 10 years with the roles that they are playing in the 5G infrastructure world. And people still believe that Nokia is just a mobile phone company, even if the truth is further from that truth. And so when you're looking for value that's not momentum, you could take a look in Nokia. It is a slow poke. I'm not saying that it is a very, very strong momentum mover, but we are seeing that Nokia here at about $4.28 has some bulls willing to partner and go reverse to a reasonable 6 to 7 to 8 area. Where will be the resistance for your Nokia? Well, clearly from a fundamental sense, there's a resistance here about 550, 650, 850. So you have all the time in the world to accumulate for dollar, for 28. It's just a long way to go for Nokia, but 50% return is not so bad. It is not expensive, by the way. So let's read about this. The Finnish telecom equipment maker Nokia sees that their margins are growing 10 to 13%. And they actually said that they're going to lay off 10,000 employees to do some cost cutting. Let's read about this one too. Chinese shareholders hold talks with Alibaba, Tencent, and 9 others on their deepfake tech. So you could see that China has been clamping down on the big tech. Let's read the news here. Chinese regulators summoned 11 of them, Alibaba, Tencent, ByteDance, to talk about the deepfake technologies and stepping up the scrutiny on the sector. So they're saying that Kuaishou and Xiaomi had to also attend the meeting. All the other companies didn't respond to requests. The deepfakes are using AI, creating hyper-realistic but fake videos and audios on whether the person appears to say this or not. China increased the scrutiny for internet giants in the recent months. They're conducting security assessments, the ability to mobilize society. Clubhouse used to be accessible in China, but Xinjiang detention camps were being talked about there, and Hong Kong independence, which was then shut down by authorities. So Clubhouse is no longer available in China yet again. Other new offerings include Kuaishou's invitation-based Feichuan app and Xiaomi's reworking of Mi Talk app. There are things that I could talk in camera about Chinese scrutiny, but I would prefer just simply saying that China is China. You got to just adjust with the times. China is always the leader and the government is always the leader, but what we could do here is, as bullish camps in the long-term trend, while we know that Alibaba is never going to break above 300 in the next short 6 months, 6 to 12 months, it will never go above there. It will never even go above 270. In the short term, Alibaba would probably fall back to about 205, or it can actually consolidate here about 235. Nonetheless, if you are a long-term believer that Ant Financial and financial fintech of Alipay is gonna be able to fight the forest. Take note how long this was. From 2020, Alibaba did nothing for you. 160 to 200, and I would assume that in the next 6 months, Alibaba will also do nothing for you. 200 to 230, at most 270. So, but then again, Alibaba's Alibaba, I would say that it is a neutral trend. It's neutral. I prefer Tencent if I'm going to go long Chinese fintech. Now, Pinduoduo looks to have gotten a deeper correction. Pinduoduo actually dropped to as low as $140 last night, only to recover because of J Powell's commentary. Now, I think in the short term, what could I say with Pinduoduo? Pinduoduo is the best company, one of the best e-commerce companies in China. However, if you could buy it low, then you've got a better reward. So if you buy it at 149, you've got the resistance at 169, you're actually in a choppy environment. So you're not really out of the woods, especially with Chinese companies. It's going to go up, down, up, down. As long as you know what to do, 140 to 99, you've got a buying pressure there, but a lot of selling pressure at 170, which might not render you actually very happy. Let's take a look at Teladoc. Because of there's news that Teladoc actually dropped last night, some people actually picked up Teladoc. What exactly was the news on Teladoc? There was an Amazon-related news. Let's read the Amazon healthcare news. Amazon healthcare news. 9 hours ago, it's saying that Amazon built its own healthcare for their employees and selling it to other companies. I can't read that. Washington Post. All right, TechCrunch. Okay, so let's expand Amazon Care on Demand. This is a competition for your Teladoc. There is fierce war, and Amazon is fighting everyone across the world. Amazon is pleased to, in their own Amazon Care pilot in Seattle, and it's expanding the offering across the US this summer, opening up to companies of all sizes. Every time Amazon tries to fight the incumbents, people actually sell the incumbent, which is actually not a profitable thing. Remember when Amazon tried to fight Spotify and we actually bought Spotify 225? Do you remember when Amazon did their podcast, or was it Apple? Something like that. I think it was Amazon. I can't remember. I think it's Amazon podcasts. And even the Amazon Roku version. Anyway, I remember a news before, and usually I would agree with the bulls. So to the bulls that bought Teladoc yesterday on that news that Amazon's gonna compete, I think that you do have a very very low downside but long-term upside here in Teladoc. So with the share prices right now trading at $190, I think that this is a bullish camp. So Teladoc Health here about $190, I would side with the bulls, buying this cheap oversold entity and actually going long. So there's a lot of strategies, but I think that there's so much to talk about, especially on my inner circle classes. So I won't talk about it right now, but I do have slides for you for that. So for those who want to listen in to my classes, you could do join our inner circle class. Our inner circle class is every single day. You can just go to awesome10x.com, register, subscribe, and you can get a peek of everything that I'm saying. There's also class this Saturday for people who wants to join. March 20, 2021, I'm joining the Lady Traders Confessions. You can go to the Facebook, just type in Lady Traders Confessions 2021, register, and join that. It's a pre-recorded webinar. I'll be discussing, my topic is how to beat our choppy market strategies in a market crash 2021. Why do you think I'm talking about the market crash? Because the market is extended. You'll see buyers, sellers. It's going to be a choppy market. You've gone 10x in a decade, some actually 10x in just a year. And so I do believe that there are extensions to be aware of. So you're a bull, but you understand that there's an extension. And so we're going to discuss to you how to navigate a potentially choppy 2021. All right, so let's talk about comments here. Let's ask your questions. Whoops, there's no comments, no questions. I'm happy to see that there are no questions. It's fine. So thank you for supporting this channel. Please don't forget to like, subscribe, and share to your friends. Bye-bye.